What's going on with the price of gold? Let's talk about it when we return. Hey YouTube, and welcome back to my channel. In today's video, we're going to talk about gold and its price and how it's been on the decline now for a little more than 5 days. So I'm actually looking at an article here from Bloomberg News, and the title of this article states that gold drops a fifth day as bond yield rally delivers a fatal blow. All right, so once more, this is published today on February 17th, 2021. Gold declined for a fifth straight day, putting the haven on course for the longest losing run in almost a year, as Treasury yields surged on expectations that the economy is recovering from the pandemic's impact. Progress on the coronavirus vaccine front and the slowing pace of infections is driving optimism over global growth, boosting yields and weighing on the demand for non-interest-bearing bullion, which has now sunk more than 5% this year. Further losses may be on the horizon, too, after bullion's 50-day moving average retreated below its 200-day counterpart, a so-called death cross pattern. All right, so we've talked about this on the channel before. Gold isn't an asset that pays a dividend, right? When we're investing in or holding gold in a physical savings account, you're relying strictly on capital gains in order to advance the value of your gold bullion. Typically, as the dollar declines in value and we see yields decrease, that drives more investors into the precious metals arena willing to actually purchase and hold gold for an extended period of time to protect their wealth from a devaluing dollar or a declining stock market. All right, moving on. A runaway rally in global bond yields has delivered a fatal blow to gold, said Edward Moya, a senior analyst at Oando. Yields are rising on reflation bets, and that is triggering an unwind of many safe haven trades. So taking a look at the 10-year Treasury rate as of February 16th, I see it published as of yesterday, a rate of 1.3% on a 10-year Treasury bond. Now, keep in mind, when we go back to the beginning of the year, so let's go back to January, January 1st. Yeah, that's usually the beginning of the year, but the first trading day was January 4th, 2021. We were looking at a 10-year Treasury yield of 0.93%. So 0.93% now to 1.3%. I mean, you're talking about a third of the overall interest rate on the 10-year Treasury bond. It has increased now. So, and even if we look back to just February 12th, we were at 1.2. Going back to February 1st, we were at 1.09. So we're seeing about a 1/10 of a percentage point increase in the 10-year Treasury rate with every 10 days. It's about a 1/100th of a percentage point each day happening in the market right now. So the longer term trend is still negative for Treasury rates, right? I mean, we're still experiencing what would be considered record lows in 10-year Treasury rates. However, over the more shorter time period, going back to about October of 2020, that's right around the time, a little before that actually, probably September, right around the time that we saw the absolute lowest rates. So beginning from October, we've seen a gradual increase now up to 1.3%. So with all this, spot gold has fallen as much as 0.4% to $1,786.88 per troy ounce. Gold was trading today at 1791.04 by 7:51 a.m. in Singapore. That follows Tuesday's 1.3% drop. And should prices end lower on Wednesday, that would be the worst run since last March. Of course, last March is when we saw the stock market sell off and all assets were actually selling off as people ran to cash for safety. That's right, to cash for safety. So in other metals, silver and palladium retreated along with platinum, which hit the highest intraday level since 2014 on Tuesday. The Bloomberg Dollar Spot Index rose 0.1%. Okay, actually looking at silver right now, silver is slightly up. I'm seeing spot price for silver. Let's go ahead and click over to silver to make sure we're reading the right spot price here. Yeah, I'm seeing silver's price right now at $27.60. That's a 13-cent gain since silver opened this morning, or 89 cents per gram and 887.36 per kilo. Of course, that doesn't take into account physical premiums, which make the gold to silver ratio, which is now right around 64 to 1, even lower when you're looking at the physical to physical comparison. A quick look at round about a middle of the range priced 1 ounce bullion silver coin. Let's go with the Krugerrand. We're looking at about $34 for a silver Krugerrand right now. American Silver Eagles, of course, are still in the 37, 38, 39, and even higher range. We're looking at 34 with a spot price of $27.60. I mean, we're still talking a greater than 25% premium on that coin, whereas you can buy a 1/10 ounce fractional gold coin for about a 16 to 20% premium. And if you want to get a little heavier and get to quarter ounce weights, you'll find those between 10 and 14%, obviously, depending on the coin you're looking at and the dealer you're shopping with. So this video and this article serves as a reminder for those of you, especially that are new to gold, that typically when the dollar is stronger, gold is weaker. And typically when interest rates are higher, gold is also weaker. And the reason behind that is gold is a safe haven asset. And not everybody believes in holding physical gold because, as mentioned, it doesn't pay a dividend. When you're holding gold, you're actually protecting your wealth from the financial system, the physical kind. You got to hold it in your hands for it to really, truly be there to protect you. That way you don't have that counterparty risk. You don't have to rely on a bank or any other individual to deliver your gold during your time of need. It's always there. It's always with you. So as we see these interest rates continue to rise, the 10-year Treasury rates continue to rise, that's probably a bearish trend for gold, especially if we do close today lower. That would be, as mentioned, 5 straight days of lower gold prices. So if you got your finger on the trigger and you're looking to pick up some gold, especially a larger gold coin or gold bar, or more than that, right? We're talking thousands of dollars when we're talking buying gold right now. Maybe just be a little bit more patient. We could have seen the low. Today could be the low. You never know. But, with the trend being the way that it is right now, I think you're going to see a little bit of a trickle-down effect, right? A little bit of trickle-down effect in the spot price. And maybe that will correspond to lower premiums. I doubt that because I think that as gold becomes more affordable from a spot price perspective and silver continues to gradually increase and the premiums remain high, that the dealers are going to keep those premiums in place on gold as more and more people want to move into gold and away from silver when they see the value that it presents. All right, everybody, that's going to conclude today's video. I hope you enjoyed today's video and learned something from it. We'll see you soon on another precious metals focused stacking video.